probably start with Taiwan. The most likely country to follow Taiwan's appreciation, in some sense, could still be Taiwan. 30 Taiwan dollar against the US dollar is still actually a quite weak Taiwanese dollar. The level that the Central Bank of China, Taiwan Central Bank, defended very vigorously in 2020 and 21 was 28. So there's still room for the Taiwan dollar to move. And it wouldn't actually completely surprise me over time if the level that the Central Bank of China defends, because the cap on appreciation in Taiwan comes from the central bank. It's fundamentally determined by the government and by government policy. The cap might change over time. So I think that's the most important thing to watch. With respect to Korea, the Korean won is, in my view, quite weak. 1,400 is a very weak level of the won. That's the level the won reached in Korea's financial crisis in 97 and 98. That is the level of the won during the global financial crisis. So on a fundamental basis, there's a reason to believe the won could appreciate. Korea's trade surplus remains quite healthy, quite strong. The current account surplus is big. The main set of factors that have been holding the won down have been the appetite for Korean retail investors for U.S. equities. So if the U.S. Stock market is on fire, that tends to weaken the won.
Yeah.
And then some of the uncertainty around the trade talks, which I don't think will be resolved until after the election.
Yeah, and there's the so-called ant investors in South Korea. The retail cohort is definitely struggling after they really chased the big rally in the United States. But how should we understand this in the context of obviously being the Korean won being a high beta for the CNY as well? I know that we briefly touched on this as well. But obviously, the idea coming from the signaling coming from the Chinese policymakers when it comes to their FX playbook is that they want stability. They don't want to hurt investor sentiment. They don't want to drive a capital outflow. Is that the right way to understand it?
I think that's the right way to understand China's current policy preference. I think it is also important to recognize that the yuan, China's currency, is starting this round of trade tensions at a substantially weaker level against the dollar than it started the previous round of trade tensions during Trump 1. When the CNY was at 6.3 or 6.4, there was room for it to depreciate and stay within its historic ranges against the dollar. Right now, the Chinese yuan is pretty much at its weakest level relative to post-global financial crisis history against the dollar. And so I think it is a much harder decision for China to let the currency depreciate further than it would be if the yuan was at a more appreciated level. You're always setting new lows. And I think President Xi has, for now, signaled he doesn't want to. And then, as I mentioned before, China's export performance has continued to be astonishingly strong. China's running $100 billion a month of trade surplus. That's gigantic. The indicators of real pressure on the Chinese yuan just aren't there. Export growth, keeps outperforming even with the trade tensions. And because the yuan has followed the dollar down, the real yuan is actually about 10% or maybe between 5 and 10% weaker than it was at the start of the year. So in that context, I actually expect the yuan to remain stable. If there's a positive outcome that's more substantive than I expect, you might even see a bit of appreciation pressure over the next few days. Where I would push back a bit is I don't think the Korean won is right now going to be determined by trading around China. The Korean won has actually depreciated much more over the past 3 years than the Chinese yuan did. It has moved a little bit more like the yen, and I think it therefore has a little bit more scope potentially to appreciate. And I think one of the interesting questions is what role will currency play? Now, again, this is not going to be a topic decided in the next 3 weeks. There is no possibility of a U.S.-Korea deal soon. I actually don't think it's an easy negotiation. I think it's a really hard negotiation because the U.S. has been signaling it doesn't want to change the sectoral 232 tariffs, which are at 25% on two of Korea's most important exports, autos and potentially on semiconductors. That decision hasn't come out yet. So I think that's going to be a tough negotiation. And I think it's going to be a test about what the U.S. wants when it comes to currency in those Asian countries that have a history of managing their currency. So there's a substantial set of very hefty, like big, difficult issues that have to be worked out between the U.S. and Korea. It actually wouldn't surprise me if the deal in July is a deal to keep talking, because I think these kinds of issues are really hard to settle quickly.